What's going on, guys? Welcome back to another video. In this video, I've got another AMC update to bring all of you this evening. So what we're going to be covering in this video is a very important question that a lot of people have been asking me over the last couple of days, whether it be on Twitter, in my YouTube comments, or in my personal life, when people who own AMC stock are asking me, have these shorts started to cover? This is a very important question to understand, especially with where we are trading at the current time. Now, we're going to look at this question from two different angles. The first is going to be maybe some of the smaller institutions that had a short position on AMC have started to cover their positions because they do not have enough liquidity or collateral to maintain these short positions in their portfolio. Now, the second is going to be that the hedge funds, the big players in this market who are shorting AMC can utilize a lot of manipulative tactics to make it look like they are covering their positions when in reality they are not. Now, in addition, we had an unbelievable day for AMC. We were up 15.38% throughout the day, closing at $57 a share. And in the after hours trading period, at the current time that I am recording, we are currently pushing $59. Now, everybody knows that June 18th is a massive week for options expiration. Now, we're going to go over this gamma squeeze situation again because at the current time, we are actually setting up for an even bigger gamma squeeze than we previously thought was possible. So before we get into all of that information, if you guys enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it. And if you want to earn 2 free stocks with Webull, valued up to $1,850, make sure you check out that link down below in my description. So if we're going to be talking about have these shorts covered, we need to bring up Ortex. So when we are looking at Ortex, we saw the short interest, the estimated short interest, fall by 0.04% throughout today. The returned shares, meaning that shares that were loaned out, have now been returned in the amount of 3.67 million shares, and the borrowed shares were about 3.64 million, with a borrowed change of negative 35.58 thousand. And the current estimated short interest as a percentage of the free float currently sits at 12.55%. Now, in addition to this, the shares on loan, as reported by Ortex, has significantly decreased over the last couple of weeks, and so has the percentage of the free float on loan versus the estimated short interest as a percentage of the free float. So the first way that the institutions are able to mess with our data, because in reality, Ortex is only giving us information of about 85% of the total market. And the way that they are getting this information is through an institution called S&P Global. Now, if you remember in 2008, S&P was one of the institutions that was misrating the different bonds in the packages of bonds that were giving them higher ratings than they actually deserve. So either way, the information that they are feeding us is most likely incorrect. But when we are taking a look at this from a very unbiased perspective, some of this data is going to be correct. Now, I do think that it is possible, and I've seen data that is actually confirming this, that about 1% of all of the short interest of AMC had been covered over the last 2 weeks. Now, this does not take into account, however, all of the synthetic and naked shares that are out on the market. And if you did not know, a naked share and a synthetic share are actually two different things, and we can go over that in a future video if you would like. Now, here is how the different institutions are actually messing with our data. They can use options chains and these different yellow lines here, and these represent the FTDs, which are the failure to delivers. Now, the first thing that they can do is they can sell what is called a deep in the money call option. Now, what this essentially enables them to do is they are still short the stock, but what they then do is they go buy what is called a synthetic long share from the market maker, because the market maker actually has a legal right to do a version of naked shorting as a part of their hedging process. And what this does is it creates the appearance that these different funds and institutions are covering their short positions when in reality they are not. Now, something to also keep in mind is that this data that we are seeing is only the reported data, and it does not take into account any of the synthetic or the naked shares that are out on the market. But at the same time, covering their shorts is not high up on the hedge funds, the different institutions that are shorting AMC's priority list at the current time. We all know that back in January when GameStop had its massive rally, which is not a short squeeze, you guys got to keep that in mind. We know this because the DTCC chairman came out and essentially said in his congressional hearing that no, margin calls were not issued, and essentially no shorts were really covering their position. So there is something else that institutions are very very worried about going into this week. So when we come over to Stonko Tracker, this is going to be all of the call options that are expiring in the money at the current time. We now have 480,000 contracts currently in the money. This means that theoretically, if everybody were to exercise their contracts, the institutions would have to go out and buy 48 million shares of AMC at the current market value and deliver them to you, which means sell them to you at the strike price that you bought your contracts at. So this would create a very significant loss for these institutions and also provide for a lot more buying volume in the market, which is why it is called a gamma squeeze. Now, when we come over to the actual option chain for AMC going into this week, this $40 strike is what a lot of people have been focused on over the past couple of weeks and months. Now, we saw this strike actually go up to an open interest of about 225,000 contracts in the past. Now, the fact that the open interest on this specific strike has massively decreased, it basically shows me that a lot of these contracts may not have actually been sold to a different person when people are trying to get out of this trade, but they are actually exercising them. So this puts a lot of pressure on the institutions to go out on the open market and buy these contracts. Now, if you guys remember what I said in the beginning of the video, I was talking about how we actually have the potential for an even larger gamma squeeze than we previously thought was possible, and that is going to be at this $59 and $60 level. We can see that there's 20,000 contracts here at $59 and 25,216 contracts at this $60 strike. But at the same time, the volume on these 60s was 78,000 throughout today. Now, it's going to be very interesting to see how much of a bump this open interest gets going into tomorrow. Is it going to be a 5,000 contract boost, 10, 15, 20? We don't really know at the current time, but this is something to keep a lookout for. There's something else about this option chain that I think is very important to mention as well. Now, there's been some debate around the community, very healthy debate, on whether these $40 strikes up here have actually been what is called delta hedged for, meaning that have the institutions actually gone out on the open market and bought enough shares to cover the exercise risk that they have for the specific contract. Now, a lot of people are worried about a lot of manipulation coming in over the next couple of days, trying to push the share price of AMC below 40. Now, that is 17, and it's actually at the current time at $19 away from where we are currently trading to the downside. That would be a very significant fall, and with the buying pressure that we see every day from AMC apes in this community constantly wanting to buy more shares, I think it's going to be very difficult for them to actually get the share price below 40. But again, anything is possible when we are dealing with institutions like this. But if we do start to see some heavy manipulation, that is going to tell you that no, these $40 strikes have not been hedged for at the current time, and the institutions are still on the hook for going out on the open market and buying the appropriate amount of shares to cover all of these different strikes. That means that if we can stay at these levels, that this $57 through $60 level by the end of this week, we could see some massive buying volume coming into the share price of AMC, which could push the share price up even more. Now, in addition to this, everybody has been really hyped up about these gamma squeezes. Now, I do think that it's going to be a lot harder over the next couple of months to have these pile-ups on these specific strikes that we have seen for this June 18th expiration date. Now, the reason for this is that a couple of weeks ago, not too long ago, AMC was trading in the $12 per share range, meaning that these $40 strikes were wildly out of the money. Now, that meant that these contracts were extremely inexpensive, and we can see that these contracts have shot up to $1,750 a share, and even these deeper out of the money strikes are still very expensive, even though they do not have a lot of time to expiration. And we are dealing with a lot of retail traders in this situation. When we go out to the next monthly expiration date, we can see that even the $130 strike costs about $900 per contract. Unless we see a massive wave of people rolling their contracts to essentially the same exact strike, I think it is going to be very difficult to see these pile ups and a massive gamma squeeze come again, like we are seeing for June 18th. Now, that does not mean that we are not going to see some buying pressure come from these institutions, but I do believe that it is going to be slightly less, and we probably won't get up to that 220,000 contract open interest. But as we can see here on this 70, we can still get up to this 30,000 contract number, and we will probably see this number go up over the next couple of weeks leading into this July monthly expiration date as well. Now, I also want to go over some FUD. This is really going to be for some new people that are just joining the movement. So if you guys basically know this by now, that to not trust any of these media outlets, you can click off this video if you would like to. So for all of you new people out there, Motley Fool, MarketBeat, CNBC, and a lot of these different news media outlets have basically taken money from the hedge funds. Now, that creates a conflict of interest, and the hedge funds actually have leverage into what these news media outlets will say. And we just have to take this article as an example from the Motley Fool. 2 reasons to avoid AMC stock. So throughout this article, I don't even want to read through it because it's all FUD, fear, uncertainty, and doubt. But essentially what they're talking about is the company's fundamentals. Now, first things first, if we're going to talk about AMC's fundamentals and where they have been over the last 6 months and where they are now, AMC is in a much better place right now fundamentally than they were 6 months ago. And in addition to this, fundamentals mean absolutely nothing in a short squeeze play. AMC is essentially the conduit between the short sellers on Wall Street and us as retail investors who have taken the other side of this trade. So what I want all of you guys to think about when you are out trying to do any of your own research or due diligence is you have to think about the validity of the information that you are reading. The best information that we are going to see comes from SEC filings, DTCC filings. We see NSCC filings, OCC filings. All of those types of filings are going to give us a lot better insight into what is actually going on, and not looking at Motley Fool, whose main objective is to spread FUD, fear, uncertainty, and doubt. It could really influence your investment decision. And speaking of influencing investment decisions, I am not here to do that either. Nothing I say in these videos is financial advice. These are for educational and entertainment purposes only. You can put your money in any place that you like where you think that you will have the best chance at making a solid return. All I am here for is to provide you guys with information and my analysis on that information. So that is going to conclude this update on AMC. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys had a great day, and I'll see you guys in the next video.